Hello everyone, welcome to Brilliant Bankers. In the previous session, we were discussing about cards, the chapter 2 of certificate exam in digital banking. So we have discussed everything about the different type of cards, the benefits of cards, and all things about the cards, including the magnetic and EMV technology in the cards that are used in the banking network. Now, let's go to the next slide. That is NFC and tap and go. NFC or tap and go. The near field communication technology enables the contactless transactions, allowing users to make quick and convenient payments. Here in a detailed explanation of each of the thing, which adds a layer of tokenization, transactions become more secure, particularly for small value transactions. So, what are the futures of these? The technology future, the future of the NFC transaction, the technology future. It's a short range wireless communication. NFC is a short range wireless communication technology that allows data exchange between devices when they are in close proximity only. They, they are small passive devices that can store information. When an NFC enabled device comes in contact or comes close, it can read and write the data of the tag. This is what the components of a NFC device are. These NFC readers are devices that are equipped with NFC readers, sorry, near field communication readers, such as the smartphones, the POS terminals, or the card readers, and can communicate with the NFC tags. Different type of applications are being used for the same. Wherein the contactless payment, NFC is commonly used for contactless payments. Users can tap their NFC enabled card or a smartphone near an NFC reader to complete a transaction. And also data transfer is also very quick between these devices, such as sharing files or contacts on connecting to Bluetooth and different Wi-Fi facilities. The security for the same, since it is a short range nature, NFC enhances the security as devices must be in close proximity for communication to occur. If not, it is not being transferred. And NFC transactions are often encrypted to protect the transmitted data. Some of the examples of these type of transactions are many credit and debit card, as well as the mobile payment cards, mobile payment apps like that of the PhonePe GP. And you do even have some banking apps in your mobile wherein you can tap and use it for the transactions to be done. Access control. NFC is used for secure access control systems such as the key cards for hotels or electronic access for the buildings also. Coming to the next slide, which are about the tap and go cards. These tap and go cards, they are used for contactless payment technology that allows users to make transactions by tapping their cards on a NFC enabled terminal. And how does it work? They have embedded NFC chips. This card contains an embedded chip which communicates with the NFC enabled terminal when the card is brought to their close proximity, the same as that of the. So NFC and tap and go is almost the same thing. They have the benefits of speed and convenience. The tap and go transactions are quick and convenient, requiring only a brief tap of the card on the terminal. It can be particularly useful in situations where reducing the physical contact is desirable, such as the condition which was in during the COVID-19 pandemic. It has a tokenization system. The tap and go transactions often use tokenization, a process where the actual cards details are replaced with a unique token, adding an extra layer of security. And it also helps in mitigate the fraud risk that are often in there in the tap and go payments. Larger transactions may require the additional authentications also in the case of tap and go. In tap and go, you can the limit is being set by the user. If you are using a NFC tap and go card, if you are setting the limit to 5,000, the maximum amount that can be transacted in the card is only up to 5,000. If the amount is above 5,000, you have to use the EMV technology in that. So some of the examples are many major credit and debit cards issuers provide the tap and go functionality on their cards, wherein mobile payments also are being done. And the main security that comes with the tap and go is the contactless payment system standards, wherein the tap and go transactions adhere to established contactless payment standards, ensuring a secure and encrypted communication process. So, what is the profit that a bank gets in the card business? The card business is a significant revenue generator for the banks, encompassing the credit cards, debit cards, and other payment cards. The profitability in the card business for banks is influenced by various factors, that is, including the interest income, fees, transaction volumes, the risk management, and competition. So, some of the elements that contribute to the profitability of the banks in the card business are the interest income, wherein the banks earn interest income from the credit card users, carrying a balance from month to month. The interest rates charged on an outstanding balance contribute significantly to the profitability by the fees and charges that are being charged. In the case of the credit card, there are annual charges. Also, in the case of debit card, the annual fees are being debited. Transaction fees. Banks earn fees on the transactions, especially for services like cash advances, the balance transfers, and foreign exchange or foreign currency transactions. The late fee and the overdraft fees. Whenever there is a delay in payment or the overdraft fees, there are penalties which are also a income for the banks due to the cards. The merchant interchange fees. These are the in this condition, the banks earn fees from the merchants for processing card transactions. This interchange fee is typically a small percent of the transaction value, wherein you can see some merchants saying that if you are using a credit card, you have to pay 2% of the transaction charge. This is because this 2% is is being or was being charged by the banks earlier. So this is why the merchants used to say 2% of the transaction is to be paid by the customer on an extra basis. Card issuance and activation. The card issuance fees and the activation fees. Charging customers for card issuance and activation contributes to the initial revenue whenever a card is being issued. That is, whenever a new credit card is being issued, the and charge of rupees 500 or 1000 is being charged by the banks by different banks at different rates. And whenever there is a replacement to be done for the cards, banks again charge for the same for replacing the lost card or a damaged card. The cross selling and the upselling. Banks often use card platforms as a gateway to cross sell other financial products such as loans, mortgages, or insurance, enhancing the overall profitability. So, whenever you have a detail of a card holder, again the banks start to gain the attention of the customer by taking them in for any other loans or by selling insurance to them. In that way, they yield profit. That is what is called as cross selling and upselling. The customer retention and the loyalty. To maintain the customer, to retain the customer, they give the reward points. While they entail costs, reward points encourage the card usage and customer loyalty, leading to increased transaction volumes and potential interest income. So once a person is getting addicted to the use of cards, it's difficult for him to go back to the cash and carry system. So in that condition, they get almost addicted and almost they start doing the same transaction or increasing the transaction. And in some cases, that can become a debt, and for which the interest is being charged by the banks. Risk management. By managing the credit risk is crucial to profitability. Effective risk assessment and mitigation strategies are being used by the banks to minimize losses from any defaults. Also, the latest technology and innovation, that is, investing in digital banking services and innovations such as the contactless payments and mobile banking apps, always attract the tech savvy customers, that is, the Gen Z customers, and increase the transaction volumes. Because on date, the Gen Z customers are the most favorite for the banks and also Gen Y customers because they are the persons who are using the mobiles on a higher level. The Gen X and the people just before that, I don't say that Gen X don't use a mobile, they don't use net banking. I'm not saying that. Comparing to the Gen Y and the Gen Z, they are still lagging behind. Gen Y and Gen Z. I myself being a Gen X person, totally using a digital banking facility. Even now, I say that the Gen X and the baby boomers are still lagging behind Gen Y and Gen Z. And that is my idea. I won't say that this should be the idea of everyone. Regulatory compliances. Banks need to invest in the compliance measures to adhere to the industry regulations also. And there keeps a competition that is gaining a larger share of the market, contributes to the overall profitability and competitive offerings, and also attractive schemes and effective marketing strategies which play a vital role in this aspect. So it is important to note that the profitability in a card business also involves managing risks associated with the credits, fraud, and market fluctuations also. Successful banks strike a balance between gathering revenue, providing value to customers, and maintaining prudent risk management practices. Additionally, ongoing management or technological advancements and changes in the consumer behavior can also impact the landscape, requiring the banks to adapt and innovate to remain profitable in the dynamic card business at all times. So, what are the backend operations that are being carried out? The transaction initiation. A cardholder initiates a transaction by presenting the card to the POS terminal or using it for an online purchase, wherein the POS terminal or the online payment gateway captures the transaction details, including the card number, the transaction amount, and the merchant information. And with that, a authorization request is being done. The captured transaction details are sent to the issuing bank for authorization. This is often done through a payment processor or a payment gateway. The issuing bank checks the cardholder's account for sufficient funds or credit and verifies if the transaction is legitimate. They're all done online. And then authentication is done. Authorization response or the authentication. In this case, depending on the type of transaction and the security measures in the card, the cardholder may provide a additional authentications like that of a PIN or a signature, after which the authorization response is given. The issuing bank sends an authorization response to the payment processor, that is to the merchant. This response indicates where the transaction is approved, declined, or needs further review. All done in a matter of seconds. All done in a matter of seconds, wherein everything is done online, everything is processed by systems, and all are done in a matter of seconds. And then comes the transaction processing, where you get the transaction is approved. If approved, the transaction proceeds to the settlement phase. If declined, the cardholder is notified and the transaction is terminated then and there. The settlement for all these, the approved transaction are batch for settlement at the end of the day. All these transactions up to the transaction processing is being done in a matter of seconds. But the settlement for this involves the transfer of funds between the issuing bank and the acquiring bank. That is the merchant's bank. It is done in the end of the day process. The clearing process. The clearing process involves the exchange of transaction details between the issuing and the acquiring banks to facilitate the settlement. This process also ensures that both the banks have accurate records of the transaction. And also the fund transfer details, funds are transferred from the cardholder's account to the merchant's account. The acquiring bank credits the merchant and issuing banks debits the cardholder's account. Record keeping. Both the issuing and the acquiring banks maintain records for transactions for reconciliation, auditing, and reporting purposes. Also, fraud detection and monitoring is being done throughout these process. Sophisticated fraud detection systems may be in place to identify and prevent fraudulent transactions. So, it is important to note that backend operations involve multiple stakeholders like the cardholder, the issuing bank, the acquiring bank, the payment processor, that is the cardholder, the merchant wherein you are going to purchase something, the issuing bank who has issued the bank, the merchant with the device, the acquiring bank, that is your bank, the customer's bank, the payment processor in between that, and the card network, that is the Visa, the Master, the Rupee card, anything. The entire process is designed to secure, efficient, and reliable to ensure the smooth functioning of the card transaction. Visualization of these processes often includes flowcharts or diagrams. Of course, I will be adding all these things in the next uh, class. Coming to recovery and follow up. The recovery and follow up processes in the context of the cards, particularly credit cards, typically involve actions taken by banks or financial institutions to address late payments, outstanding balances, or situations where a cardholder is in default. Here, some of the overview of the late recovery and the follow-up processes are the payment follow-up, wherein a cardholder misses the due date for credit card payment. The bank typically sends a notification reminding them that they are overdue for the payment, and banks may apply late fees or penalties for the same. For example, Mr. A missed a due date for his credit card payment. Automatically, he received an email or a SMS saying that it's the payment is overdue and the applicable late fees will be applied on it. The communication, email letters emails and letters are being sent. Issuers often use the emails or physical letters to communicate with the cardholders about the late payments. Nowadays the physical letters have reduced. Mainly it is by emails and messages that are being sent by the banks. They also give the telephonic calls also for the same purpose, wherein a customer service representative may call or make a phone call to the remind the cardholder of overdue payments and also provide assistance for the same. Automated payment reminders, wherein the automated SMS alerts may be sent to the cardholders as a reminder for upcoming due dates or to notify them as a late payment. That is, if you are having a loan or a credit card payment, you do get a message almost 3 to 4 days earlier that your payment is due. That is the automated reminder. The customer outreach program, wherein the card issuers typically have customer service teams ready to assist card holders facing financial difficulties. Some banks also offer financial counseling services to help cardholders manage their debts more efficiently. Also, some also have the recovery and the collection agencies, wherein case of persistent non-payment, banks may engage the third-party collection agencies to recover the outstanding amounts. Collection agencies may negotiate with the cardholders on behalf of the bank to establish a repayment plan for them. There are also legal actions that are being taken. In extreme cases, banks may take legal actions to recover the outstanding debt. This may involve filing a lawsuit against the card holder. After repeated attempts to recover substantial debt, the bank automatically decides to take a legal action against the cardholder. This legal proceedings aim to compel the cardholders to repay the outstanding amount. What is a repayment plans? They are structured repayment plan. In some cases, banks may offer structured repayment plans, allowing the cardholders to pay off their debt over a period with reduced interest rates so that they can pay it in their own time. Education and assistance. Banks may also offer resource and information to help cardholders better understand their financial situation and manage their debts responsibly. Some banks have the hardship programs that provide temporary relief to cardholders facing financial distress by giving a lean period for them. Also, by the final thing is by the account closure. If a cardholder repeatedly defaults on payment, the bank may choose to close the credit card account to mitigate the future risk that is going to happen for the bank. So it is essential for cardholders facing financial challenges to communicate with their card issuer proactively, which helps the banks. Or many banks are also willing to work with customers to find mutually beneficial solutions and avoid severe actions like charge-offs or the legal proceedings. And open communication and willingness to collaborate with will often lead to better outcomes in this condition. What are the information security issues of a card that is being issued by the bank? Coming to the information security issues, this is in context of the cards, like that of the credit cards or the debit card. They are very crucial due to the sensitive nature of the data that is being involved. The main or some of the type of information security issues are the card skimming. So skimming devices are the malicious tools that are being used on the card readers like that of the ATM or the POS terminals to capture the card information. And the impact of the card skimming can lead to unauthorized transactions and also compromise the cardholders' data. You do hear about cards skimming nowadays a lot. The data breaches, unauthorized access to the data issuers database, the merchant system, or the third-party processor can result in a data breach. That is by getting into the system. The phishing attacks involves tricking individuals into providing sensitive information such as the card details through fake websites, deceptive emails, or by fake telephone calls saying that they are calling from a particular bank or a particular ATM office. The card not present frauds, wherein the card is used for online or phone transaction without the physical card being present. Criminals may use the stolen card details for unauthorized online purchases also. The weak authentication, that is the low score authentications that are being used. Inadequate authentication methods such as weak passwords or a lack of multi-factor authentication can expose the card accounts to unauthorized access, which may finally impact unauthorized access, and unauthorized users may gain access to the cardholder accounts and conduct the fraudulent activities. The malware and the point of sale attacks. Malicious software can infect the point of sale systems, compromising the card data during transactions, wherein the stolen card information may be used for fraudulent transactions, and malwares may also go undetected for extended period in these things. The lost card, physical card or a physical loss or theft of a card can result in an unauthorized use of the same. Criminals may use the lost or the stolen card for transactions until it is reported and deactivated. The insider threats, wherein the employees with access to the cardholder information may also misuse or leak sensitive data, wherein the bankers are involved. Insider threats can lead to data breaches and compromise the integrity of the cardholders' information. Also, the contactless cards and the security concerns in them. While convenient, contactless cards may be susceptible to unauthorized skimming or the interception of the communication devices. As said earlier, if you have a setup limit of 5,000 and if the card comes near to a NFC equipment, there are chances, that a transaction of 5,000 can be done, or the limit that has been set can be done. So, what is the impact on this? Unauthorized transactions or data interception could occur if appropriate security measures are not in place. To mitigate these information security systems, it is very essential for the card issuers, the merchants, and also for the users to adopt robust security measures, stay informed about the emerging threats, and comply with the industry standards and regulations also. Regular monitoring of all these encryption, security authentication practices, and prompt reporting of lost or stolen cards are the integral components of a comprehensive and card security strategy. So, with this, we come to the end of chapter 2, that is cards, in the subject of digital banking, certificate exam in digital banking. If you have any queries, please do post it in the comment section, and please feel free to leave any comments in the comment section. Your feedback is very valuable to us. If you do like cloud, please do support us by liking, share, and subscribe our channel. Hope we will give better videos. We are on the process of improvement. Please do support our channel. Thank you. This is Nishan signing off from Brilliant Bankers.